All right, here we go. We're going to be reviewing the market today. So, hopefully, you guys are all doing good. I know I didn't go live this morning. That's on me. I should have gone live. I really don't have an excuse other than I should have. So, we're just going to keep moving forward. So, we are going to review the market today, though. So, hopefully, you guys enjoy. But yeah. And then I'll make a market recap. Yeah, you guys know the drill. So, November 25th, 2025. Today was a Tuesday. Alright, let's see what we can find. So, first things first, on the higher time frame, as I've said before, we have this 4-hour CRT in play. And I need to make an updated video on CRT because I feel like my old videos don't really explain it to the fullest extent of the value that it can provide. Because CRT can be a series of candles. Candle range can be a series of candles, not just a singular candle. And that's something that I feel like took me a bit of time to realize. But for instance, we have this weekly for value gap, we have the data low that got swept, we have SMT with the data low, and it was also a previous month's low. And we have a very obvious range of 4-hour candles, specifically these two red ones put together. So take these two red candles put together, mark this out, that's your candle range. You can even mark it out like this, right? Just a wide range candle or candles. Then you want to see a sweep of that and close back higher within that. It's nice starting to see what I'm talking about, right? When we get that, with the high probability, we should draw to the other side of that candle range. Hello? Hello? Hey.
Good job,
I'm
man.
in the middle of live streaming.
Oh, hey. I
Hey.
was just telling you, just good job today, man.
Hang on, guys. I'm going to pause the stream for a second. Alright. Back to what we were talking about. So, okay, so yeah, CRT, it's not necessarily going to be a singular candle. Sometimes it's going to be a series or multiple candles put together, right? In this case, it was just a very obvious series of 1, 2 red candles. You can actually include this third candle. What up, Cave? How's it going? So this is something that took me forever to learn about CRT, is that like it's not just a singular candle, it can be a series, right? So here we have this 4-hour series candle range, right? 4-hour series candle range. Hey, what up? And so it's a very important thing to know, right? CRT isn't necessarily going to be a singular candle. Sometimes it will be a series. Dude, I was not talking to you. I wasn't talking to you. Siri went off. Shut up. Okay, so CRT isn't necessarily going to be a singular candle. Sometimes it'll be a series. Don't you dare go off. I'm gonna need to make a new video on. Need to make a new video on CRT explaining this, coming soon. Yes, sir. Yes, sir. But do you guys see what I'm saying, right? Sometimes you're gonna get a series of candles, right? And so it's important to understand that this is still CRT, right? We'll get a wide range body or a wide range candle or series of candles. Close back within that range. So what are the 3 things you really need, right? The 3 things you need for CRT. Things you need for CRT. 1, I took a 1-hour win today, so that's good. Wide ranged candle or candles. Where's the parenthesis? There it is. 2, manipulation candle or candles. Closing back within the initial candle range. And then with a high probability, the market will draw back to the opposing end. Nice, man. That's good. That's good. Yeah, I took like a 1-hour win today, so. But do you guys see what I'm saying, right? Manipulation, close back higher. I know when we get this, I know, okay, now I'm looking for longs to the other side, right? Yeah, man, 1 micro is the way to go. I mean, there's no, money is money, and sometimes if you can do the lowest risk possible, that's perfectly fine. You know what I'm saying? Sometimes that is something to celebrate. Just the fact that you can even just take a trade with a micro, because I mean, the reality is you can make a lot of money with 1 micro. You can. And then, yeah, you guys see what I'm saying? Like, this is a really good way to identify bias. So, candle range, manipulation, candles, and then we know we're going to distribute to the other side. Hopefully that makes sense. So I'm going to put in a text here. CRT is very nice for bias. Right? Yeah, man, I trade 1 micro on 50K, 2 micros on 150K, and that's what. Yeah, you really like. You don't need to do anything crazy. You can just do 1 micro or 2 micros over and over again. Yeah, exactly. You got the idea. Personally, I try and keep a fixed dollar risk per trade, so I do the calculation. But I've been trading the leap like that with one mini for every trade on the leap because it's a 100K account, and obviously I got to go as heavy as possible because it's a simulated trading environment and that's the max you can do. But I'm noticing that um, you can have a lot of success just consistently trading one mini or 1 micro or whatever the case may be for like just consistently doing that. It's kind of cool. So okay. So I need to make an updated video on CRT. So I'm gonna put a note on that in my phone so I don't forget. 4-hour CRT for bias. Updated video on CRT. You can use a series of candles for your. Shut up, Siri. Oh my gosh. I'm just writing this in my phone. I see you guys commenting. Hang on. Yeah, okay. Just writing a note for a new video idea. What up, BLJ? It's good to see you, bro. Yeah, so this CRT was incredibly nice for bias. And we also had this previous month's low SMT. This was also a data low, right? And so with all this in mind, it's all of a sudden very obvious that, hey, the bias for the past 2 days should have been bullish. It becomes very, very obvious, actually. So you can see today we just essentially just had a buy model dipping back down and then continuing higher to the CRT high. You should take 1 micro per account depending on the size of the account. It makes it very hard to lose accounts. I agree, man. I think maybe when I get funded, I might do something like that. But the problem is, I also do want to risk the same amount per trade, and so I don't want to just risk more because I get more points on a trade. I'd rather do it dollar by dollar, like I'd rather keep my trades consistent dollar wise rather than contract wise. Hopefully that made sense. If it didn't, then I don't know. But yeah, let's go ahead and screenshot this again. Oh, I put previous month's high S&P. Whoops. So yeah, that was kind of how you could have identified bias. Was the CRT. And then we do end up getting a buy model, so we're going to look at that. 4-hour CRT for bias. Number 2. Okay. So, I did talk about this a little bit yesterday. But, yeah, from here, we still know we're likely drawing up to this CRT high. So, we can mark out this 4-hour gap. Now, if we measure out, I think let's actually get rid of this for a second. If we measure out, here, let's get rid of everything real quick. If we measure out the move from here to here, we actually do tap equilibrium. So this price leg, I think this price leg, bearish price leg, was actually efficiently delivered. So you can see that here, which is a big reason for why we went higher, right? Equilibrium gets tapped. So we have a 4-hour Provide gap. At the bottom, we have a hidden order block. So now you might be saying, oh, but we didn't efficiently deliver the displacement leg. Bruh, measure out this displacement leg. You can see clearly we do actually. And once again, well, what about this displacement leg? If we're displacing, I'm not anticipating it to go rebalance all the way down there, because if it did, that would actually be a red flag, right? So it's all about understanding which displacement legs should be rebalanced to equilibrium, or which legs should be rebalanced to equilibrium and which ones shouldn't be. Like this one should have, this one probably should have, but since we're displacing aggressively, this whole entire displacement leg, that doesn't need to be, right? So 4-hour Provide gap, rebalanced to equilibrium of this and equilibrium of this. So I'm going to put some notes here, right? Saying market is displacing aggressively. The full displacement leg here does not need to be fully rebalanced because we are in displacement. Because we are displacing, we actually expect a complete retrace to equilibrium, because that would be a red flag. What I'm talking about is this displacement leg right here, from here to here, right? We do not come to equilibrium of this because it's not, this is not, the market wants to go higher, so why would it want to come all the way back to equilibrium? It's only going to rebalance certain displacement legs, right? Not every displacement leg. Here, I'm just gonna screenshot this. Hopefully that made sense though. We're displacing. I'm only anticipating this displacement to get rebalanced, this one to get rebalanced, not the actual entire displacement leg. Okay, so I'm gonna put this as aggressive displacement. What displacement legs should, what price legs should be rebalanced and what ones shouldn't. I call out the move lower at 5 a.m. in New York, and it happened exactly. You can check out in NASDAQ section of the journal server. That's so sick. I'll look at that after this. That's awesome, man. So yeah, we have a weekly fair value gap. So we know, once again, IRL to ERL, right? We have a fair value gap delivering off a fair value gap. So we can expect IRL to ERL. So we should have known probably with high probability that this should get held. Equilibrium tapped here. Nice little market maker buy model here, right? With this 4-hour gap. Now, let's actually delete that. So this leg specifically rebounds to equilibrium. You know, guys, something to keep your eyes on is these hidden. When you have two fair value gaps like this, maybe you might want to consider using these hidden order blocks as your PD array, right? Because you can see how nicely it's a very specific circumstance when hidden order blocks are going to work, but these are going to work very, very well when it's got two fair value gaps on either side, right? It's going to work very, very well when it looks like this. There's two obvious FVGs on either side when the market is displacing, right? Does that make sense? It's a specific circumstance in which these hidden order blocks are going to work better. Something to consider. And I'm calling it Hippo because that's the name Hopalopica gave it in his book. He calls it hidden interbank price point. But just a hidden order block. So in these very specific circumstances, they're not always going to work, but in circumstances like this where we're displacing, hidden order blocks will work, and they'll work very, very well. So something to note. So I would consider using that as my higher time frame PD array, and then we could drop down to a 15-minute or a 5-minute and look for change in state out of it. Works well in these exact circumstances. So we can drop down to a 15-minute or a 5-minute. Hey, what up, Trade Stop? How's it going? So yeah, I prefer to actually use this hidden order block as the PD array instead of the 4-hour gap because, well, this is just so much more obvious of a PD array, in my opinion, right? This gap, I mean, this is just something you're going to have to remember, but when you have two gaps lined up, here, let's get rid of everything. This is just something that's going to occur in the market a lot, but something you'll know is when you have two fair value gaps that are just resting one below the other, what will happen is we'll IOFED the bottom, right? Meaning we barely tap the top of the bottom one, and then we utilize the top one, and the bodies respect the top one. And so this is something you're going to realize from screen time. And so what that means is this thing right here, this hidden order block is actually a PD array of its own. So I can use this hidden order block, 4-hour one, and we can frame a model off of this. Just got off my live because I was thinking of doing backtesting live. I see you doing one. We lit. I pair them. Yes, sir. I'm always backtesting, man. I backtest every day. Well, I try to. So I'm curious if this is like a 1-hour. Yeah, so this is a 1-hour one as well. So we can definitely align this with the 5-minute. I mean, I would even consider aligning it with the 5-minute, even if it wasn't a 4-hour one. But this is for sure a 1-hour one, right? And it's a rebalancing of this price leg here. So yeah, just something to remember for the future is like when you got those stacked FVGs on top of each other, that little down up movement, it's gonna be nice PD array. I've never really used the Hippo, even though I know ICT mentioned it. ICT's mentioned it. I'm pretty sure, like if he, I mean, I would never expect him to mention it because it's in Hopalopica's book. I swear, anything in Hopalopica's book, I think ICT gatekeeps or something, but are useful things that I found in Hopalopica's book, but I will like advise people like who want to read it. It's like it is very confusing. Like just because I take something away from a book, like I took out like Hippo, like hidden order blocks, a couple other things. That doesn't mean that I probably understood like 15% of that book. And that's fine because I learned 15%. You know what I'm saying? So it's just kind of like, it's just kind of like, understand, it's such a long journey. And you might not understand everything. That's okay. He says it's one of his 81 PD arrays. Bro, I'm not gonna lie. I don't even think ICT even knows all the PD arrays. There's probably PD arrays that he doesn't even know about. I'm I'm being serious. Like, if there's people identifying it and ICT's never seen it, I mean, they're gonna use it as a PD array. But yeah, that's crazy, man. That's crazy. ICT really is. He really is him. So. Okay, so yeah. So the question is, do we actually want to use this, or do we want to use this 1 hour gap instead? I don't know. Let's actually look at your journal, BLJ, and let's look at your short. I think we'll start out with the morning, and we'll look at, okay, where were the opportunities for shorts, and then we'll proceed to look at longs, look at what happened in the post 10 a.m. window, and see what opportunities there might have been for longs, or just look at the market in general. Let's see, NASDAQ, expecting bearish movement. Yeah, this was... You called this, man. You called it. You most definitely called it. Yeah. Let's see. You expected to move up to 24,800. Yeah, man. You called this. So I think we'll use this 1 hour. We'll use this 1 hour hidden order block as our PD array, and then I guess there's not really a clear 5-minute change in state besides the order block here. So we'll start out with this, right? Now I'm not saying I would identify this in the moment, but it's just worth noting for the future, right? So. I just like marking out everything I can notice because the more I can mark it out in the past, the more I'm going to be able to see it in the future. 1 hour. I mean, it's like knowledge just all compounds on itself, you know? So what's interesting is we probably backtested OTE a bit. Yep. Perfectly, right? So OTE. Wow, that's crazy. So there's the sniper model right there. I still haven't made a video on that. The sniper model is something, basically OTE of a change in state to a low. It's a sniper. It's gonna be a sniper entry, right? So there's 5-minute change in state. I'm going to project this out. 1, 2, 3. Hey, we did end up going 4. Maybe just target 2 here. The Hippo works because that area is a BPR as there is a sell side wick and a buy side wick. That's how IC explains it, if I remember correctly. Yeah, that would make a lot of sense. I mean, there's a million reasons why it works. I mean, it literally is a hidden order block. I mean, think about it. Move lower before move higher. That's an order block. Doesn't matter. If I zoom in on lower time frame chart, you will see that as an order block. So it doesn't matter. It doesn't necessarily look like a typical order block. It's still going to be an order block because on the lower time frame it is. But yeah, there's a million reasons why it works. It's like, well, it's usually because also we hold the top, the bodies hold the top for value gap, and then the bottom for value gap gets IOFED'd, right? The list goes on and on. There's so many reasons why, like conceptually, these hippo type concepts actually work out. So I don't think I would take this. I'm just kind of talking, but it is interesting. I'm not even talking. I'm just looking around. And let's just get a really rough look at true opens. We're below midnight. Yeah, and if I remember correctly, we also had SMT with low from over here. Or something like that. Here, let's just mark this out. Let's just screenshot this. I don't need to get into the true opens right now. It's fine. I want to look for real trades. I want to look for actual, like, realistic trades I could have taken, right? That's kind of what I'm looking for. But I do think it's valuable to look at stuff like this. So at 10 a.m. Flow state, retest, 1 hour lining with the 5 minute. Okay, so let's just go look around some more. Yeah, I could keep going, like why there's more reasons why hippos like are valid. I mean, but it's just kind of, it's common sense a little bit. It's just in between two for value gaps. So when there's displacement, obviously, the bodies are gonna hold, the bottom one is more likely to be IOFED. So okay, this looks like a phoenix, and I think it was. Yeah, this definitely was. Maybe I was like asleep or something. I think I was asleep, but man, it makes me mad because it's like, wow, could this have been a more obvious phoenix? I don't think so. I think this is probably one of the most obvious phoenixes I've seen. I don't think you can get more obvious of a phoenix than this. It makes you kind of mad because it's like, wow, if I just saw this, if I was just on the charts, I would have definitely taken this. So for those who don't see it, right, we had SMT with, looks like Asian high. So Asian SMT. Asian SMT. And then, right, it obviously aligns with AMD here. So Asia SMT, bang, bang. Hey, the more reps we get in, the better we get. Every single day, we just get a little better. And it adds up. Now, this was not, I guess, not sequential, but still. As long as it fits the narrative exactly. So, we get a sweep of all of these low resistance highs. It's not sequential, but I really don't care too much. I think the important part is that it's got good AMD with good signature, and we've obviously taken stop losses, right? Sometimes you just have to conceptualize it and not overthink the exactness of it. And we probably used the 1 minute one. Let's just go down here. We don't tap the 1 minute one. We'd probably get the 2 minute one. The 3 minute one? Yeah. So I would use the 5 minute one just because that's, I don't know, that one's the most clear to me. So 5 minute rejection block. And then Very simple trade, right? So this is, I made a video on different types of phoenixes. What would this be? Phoenix type A or Phoenix type B? Because I just made a video on this. So A is when the SMT is currently being formed. B is when the SMT is already formed, right? So in this case, we push into the rejection block and the SMT is already formed. So this would be a type B. Versus if we have a rejection block and one asset takes the high of it and the other one doesn't, and then that forms SMT, that would be while the SMT is still forming. So this SMT has already been made. I don't know if that made sense, but yeah, B, exactly. And that's just something that I've found from observation, right? Sometimes you just need to make certain things to describe the behavior, or not necessarily make things, but you just need to be able to give certain things names because you've described the behavior occur in the market so much. So then we could project out the rejection block, and you can see how perfectly we go eight projections of it. So I like to target 7 projections, but you definitely could have targeted 8 projections. I probably would have targeted 7, and then wow, you can see how simple of a trade this was, right? Right down to 7 projections. You can go break even at probably this low, or even sooner if you wanted to. That is up to you, but right down to 7 projections. So Phoenix type B, right? Because we had already, the SMT was already made when we tapped the rejection block. Did I say hi to you, Kirk? What up, Kirk? So yeah, you can clearly see why is this a high probability Phoenix model? Because here, let's actually make a note of this. Why is this high probability Phoenix model? What are all the reasons this is a high probability Phoenix model? I need to make a video. Actually, I could make it this market recap. What makes a good Phoenix model? But we'll just do it really briefly here. What makes a good Phoenix model? This has everything that a good Phoenix model needs. So first of all, the rejection block in this specific instance, obviously it takes stop losses, and it takes a lot of them, right? Obviously takes stop losses. We can clearly see that is the case because all of this was low resistance, bang, right? That move higher or lower within 5 minutes, that takes the stop losses. We know that that's going to be we know this rejection block took stop losses. Second, the signature of the rejection block is very solid. Meaning, this is very obvious that we just went boom, boom, really fast, and it has a good signature to it, right? It's not too big, not too small. Yeah. Here, I'm just going to put just right size. 3. There's been enough AMD, or accumulation, formed, and then 4, I mean, this is a requirement, but SMT, right? And then when we have all these things, we can say with a high probability, like, yo, this is probably going to be a Phoenix model that's likely to work. So let's just say we targeted the 8th, because it's a pretty looking trade if you target the 8th. It really is. It is a very pretty looking trade. But it has all of the things that we, like a good Phoenix model should have. And as well, if you enter that consequent encroachment, you would have got double the RR. Maybe you, for me, what I'm considering doing is I might start doing like half risk at the rejection block and then maybe another like quarter risk if we tap the midpoint or something like that, right? Because I already know Phoenix is going to be high RR, so that's something I'm considering, right? Just entering, because I don't want to do full size because it's just such a tight stop loss. And then maybe do add on another quarter if we hit the midpoint, because that's Phoenix 0, right? But something to consider. So Phoenix type B. Right? Let's go ahead and screenshot this. Here's how you would take the trade. Literally just set a limit order at the rejection block. Bang. Stop loss above the rejection block. You can go break even. You can go break even kind of like whenever you want to. Kind of just based off of like what you think's best. Maybe at this low here. Right? Personally, I'd go break even. I'd probably go break even at like this body. That's what I would do, right? Everyone's different about break even, but that's personally where I would go break even, because at that point I'm like, hey, we either gonna go or not. Maybe you could even target go break even within here. Once again, it's kind of like a personal preference thing, but that's where I would go break even. And then you can see. So honestly, guys, this is going to be trade of the day, guys. I think we'll post this as trade of the day. Phoenix type B. You can clearly see the AMD, right? Accumulation, manipulation, Phoenix entry, 8 projections. So 8:15. Phoenix, 5 minute. And then we have a Phoenix 0, right, where we enter. Let's just go to show, like you enter at the midpoint of the rejection block. Now we got double the RR. With this one, as always, you can scale out as much as you want. So there's Phoenix 0. Meaning enter at the midpoint of the rejection block. So bang, that was at 8:25 on the 5 minute. Let's go ahead and save that. And as always, you could have waited for an aligned time frame change in the state. But yeah, I think this is trade of the day. I guess this happened at 8:30, so pretty early, but still, right? And then as well, we were probably above all the true opens, but that's besides the point. You could have waited for a line time frame change in state, like something like this. Like this, if you could get in on this, I mean, you're a GOAT, because this is a very, very impressive trade if you can get in on this, right? Like on something like this, like, oh, could you imagine getting in on this or this? Either one of those candles. I mean, I don't think this is very realistic, but just for fun's sake, like entering on the change of state out of it, now you got some insane RR, right? But it's hard to catch that. So 5-minute rejection block, 30-second change in state. So flow state off of this. Took any trade? Not while I've been back testing, but I did take a trade actually in the afternoon. I took a 1 hour trade, and it was a win. So I'm grateful for that. So this was, 8:31. Flow state, close, 5-minute, aligning with the 30-second. Not necessarily real. I'm not saying this is realistic, guys. I'm not saying this is a realistic trade. I was just showing how you can align time and price, right? You get that Phoenix entry. Let's say you want to be extra precautious. You wait for the change of state out of it. What up, Tempu? How's it going? Good morning. It's night for me, but we vibing. Okay, what should we look at next? I guess I kind of wanted to. We were looking, okay, how could we have caught shorts? I mean, that was pretty clear how we could have caught shorts. So, right on market open, we go lower. We actually have a rejection block on the 30-second. Yeah, it's night for me. So, this kind of was its own Phoenix model, actually. I don't know. I don't really want to look at more Phoenixes right now. I'm kind of all Phoenixed out. Yo, every time I think that the market's just already shown enough of its hand, I get disproven, bro. What the heck? The end dog was also the same exact spot where we got that Phoenix. Ah, man. It's just always fun when the market reminds you, like, yeah, you have a skill issue. You have a skill issue. It's you. It's you. It's you. Lock in. Look at that end dog. We're going to have to screenshot this. So this end dog was aligned with that Phoenix entry at the midpoint. It's a nice little additional confluence. End dog aligned with Phoenix. 0 entry. Alright. And then maybe you mark this out. This rejection. Because this is SMT. It's kind of a weird SMT. I'm not going to lie. Kind of a little bit of an uncomfy SMT. Like, I don't know. I'm not a huge fan of it. Here, okay, why do we still have end dogs up? Let's get rid of those for a second. Alright, so we have, so there was SMT with this. We just go straight down from 940 and onward. Okay, we will mark this out. Very close to getting stopped out, but I mean, maybe. This is also a pin bar, isn't it? Darth Maul lightsaber type of thing. I think. Wait. I want to get better with pin bars. I think this is a pin bar. I don't actually know. Pin bar. Javier said I actually do want to get better at pin bars. I think it's just like these Darth Maul lightsaber looking things. It could be green or red. And like this one, we come back into it, we go lower. How are you, Jake? Dude, just moving along. Okay, wait. Javier just told me what a pin bar is today. Yeah, so this thing. So I think it's just like a giant like wick on either side, like a Darth Maul lightsaber, and it can be green or red, and it's when it sweeps liquidity. I think that's what it is. So I think this would be valid pin bar, but I don't know. But I already have PB as propulsion block. Here. Here, let's ask Javier, and let's see how far down we go. Yeah, let's ask him. I mean, this is a clean. I think Javier says that you just target 2R. Hey, Javier, are you here? Javier, bro, I need you. Javier, join the stream now. Javier, please join the stream. Javier, if you join the stream right now, you're the GOAT. If Javier actually responds, I'm gonna be mind blown. Okay, let's see. Let's ask Javier if this is a pin bar. I need to respond to FA's comment. FA was asking me. I'm about ready to journal this little thing here. That'll be more of an inside bar. Maybe I just don't know what a pin bar is. I suck, bro. I don't know pin bars. Okay, let's keep looking around here. So on the 1 minute, it looks like we had a low time frame 2022 model where we have probably a sweep of liquidity. Hey, look at YM. Look at the way YM sweeps out all these lows. I think we had a SMT with this low. Could be wrong. Oh, wow. Here. We obviously sweep out this low for sure. So we sweep of this low. I think there's SMT with this low. I could be wrong. I don't remember. But I think there was SMT with it. Yeah, this one's all the way down here. We gotta have SMT with this low, I would think. Yeah. Yeah, we definitely have SMT with this low. Okay. And this is partial previous day low SMT, right? But I'm not going to mark that out. I'm just going to mark this as SMT. So, on the 1 minute, after we sweep out that low, we get we get that sweep. We actually have an inversion for value gap here. BPR. Oh, what? Oh, man, this actually kind of makes me mad, bro. This was first strike. We totally had first strike today. Oh, gosh. I missed out. I missed out big time, dude. I would have caught this. What do you guys think? You guys think I would have caught this? I think I would have caught this. Yeah, the first center for value gap, just change the state out of it. I have a feeling I would have caught it. Anyway, liquidity sweep, break of structure, right? So that's kind of what happens here. We get a liquidity sweep, we get a break of structure on the 1 minute. I'm pretty sure this might even... I'm not going to lie, this is going to sound kind of bad, but I don't know if the silver bullet gap is the first gap that forms after 10 a.m. or the first gap... I think it's the first gap that forms after 10 a.m. Because I was wondering if it's the first gap that forms after 10 a.m. or like the 2022 model that holds after 10 a.m. Because if it was that, then this would be valid. But I don't think it is. I think it's specifically... I think silver bullet is specifically the first for value gap that forms after 10 a.m. Yeah, I think I would have caught it, bro. I think I would have caught it. BLJ, I don't know if you know this, but is silver bullet specifically isn't it the first for value gap that forms after 10 a.m.? Let me know. What up?
Are you live?
Yeah.
Can I be on the live stream?
Yeah, I guess. Sure. What up, bro?
Hey, what's up, man?
Yeah,
What's up, guys?
We're kind of in the middle of. Yeah, we're in the middle of reviewing this 2022 model here. We had a sweep of these lows with SMT, and then on the 1 minute. So this is a perfect example of the market getting getting a reversal at 10 a.m. This is something that happens a lot. So 10 a.m. Eastern. So that's 8 a.m. our time.
Oh, okay.
So what'll happen a lot is you'll expect something like this where around 10 a.m. here we got it was at 9:50. We got a sweep of that low, break of this high, retracement to the fair value gap that was in discount. So this is a nice example of a 2022 gap. Hey, BLJ says hi.
BLJ says hi.
Yeah.
Hey, what's up, dude? Oh, you got a lot of people in that chat. Wow.
You think?
Oh, yeah, dude.
I mean, people just come and go, but yeah.
Wow.
But so yeah, this is nice because this was probably at OTE.
What does OTE mean?
So, it's just a measurement of a range of price. So if I have for instance, this swing low to this swing high, I can use this tool, and it helps you identify. Red is bad, green is good, bro. He remembers you from
Oh, yeah, he remembers. Let's go.
But basically, so you know how anything let's say premium and discount, right? Where's my tool for premium and discount? Where is it? Premium discount tool.
No.
Here it is. So
I kind of understand it. It's iffy.
does
But I'll
he?
get there. I'll get
so
there.
so you know how like premium discount, anything above the midpoint is in premium, anything below midpoint is in discount. If I measure out this range of price, right, from here to here, this would be in discount.
Okay.
So it's below halfway. Does that make sense?
Yes.
If you go to the store,
I don't.
if you go to the store and something's on sale, it's on discount.
Oh, okay.
So if it's
so
below,
this is discount. The red.
no,
The green is discount.
yeah, because it's below. You're
Oh,
buying.
so you want to buy low,
you're,
sell high.
you're buying
Yeah,
below. This is what the store is selling it. Now they're going on sale. So this is below the midpoint of this range. So it's discount.
Oh, so it's below. Okay.
Below the
okay.
midpoint.
So you don't want to buy
So
here. 'cause
so
it's in the red.
yeah. So what you'll.
Oh. But what about wouldn't you want to buy there? Because look, it's going up still. No, we're not really.
That's not.
Oh, okay.
No, that's not. It's not in discount. We're just looking at how the mid. How this fair value gap forms in the discount of this. Of this displacement leg that breaks this high. So okay.
Okay.
So OTE is basically even more. Where's the fib tool? Sorry, I need to find this first. Why can't I never? Okay, there's my. Okay,
That's a lot of tools. Holy cow.
yeah. So OTE is basically taking
Complex.
premium and discount to the next level. It's saying, okay, there's actually going to be a specific optimal point within premium and discount that's going to be even better for you to expect the market to come back to, and it's this range between these lines here. So it's basically optimal discount, right? So anything below midpoint is discount, but optimal discount is anything that's in this area, right? And then
Okay.
this yellow line is like the absolute like sweet spot statistically.
Oh, okay.
So
When you're live trading, can you pull all this stuff out and see, or does it go too fast to like?
now you can do this.
Oh, okay.
But yeah, does that make sense? What
That does make
OTs?
sense, actually. Well, everyone, if you haven't subscribed to Jake, subscribe. He's the best teacher out here in trading. So,
All right, see ya, bro.
hey, see, man. Thanks for
Peace
listening.
out.
Yeah, peace out.
Yeah, we got sweep, break of structure, fair value gap at OTE. Right? This might even be better suited on the 30-second, but that's beside the point. Yep, he's learning a lot. So I'm not gonna call this. I'm gonna call this just like regular OTE, right? So we take the displacement leg. So this is the displacement leg. We find OTE of it. Oops, whoops. And yeah, this is a nice 2022 model. You guys see what I'm saying? And then you could take this up the entire day, man. You could have taken this up the entire day. I don't know if this was Silver Bullet or not. I think this one was Silver Bullet. Oh yeah, I was gonna ask you, bro. Is Silver Bullet technically? It's only it's the first fair value gap that forms after 10 a.m. That's a 2022 model, right? Is that what it is? So I don't think this counts as Silver Bullet because the fair value gap forms at 9:51 or 9:52. Silver Bullet needs to be the liquidity sweep, break a structure, fair value gap that forms after 10 a.m. Right? I think that's what it is. I'm gonna have to do some research on Silver Bullet, but I'm pretty sure that's what it is. It sounds kind of bad, but that's why I haven't made a video on Silver Bullet, because I keep forgetting what it is. I'm not gonna lie. But I think it's the fair value gap that forms the 2022 model that forms where the fair value gap is after 10 a.m. I'm pretty sure, but someone correct me if I'm wrong about that. Yeah, the very first fair value gap that forms after 10. So this isn't Silver Bullet. This is just a regular 2022 model that formed. And it's still nice. So let's mark this out, right? We could project out. I would project, let's see. Yeah, maybe this whole leg down here. So 2, 3. Actually, let's just say that we targeted this consolidation. I think that'd be fine. So like 3 projections or so. Yeah, the first for value gap that forms after 10. So it's like first presented for value gap, but for 10 a.m. kind of. But specifically for the 2022 model. Okay. I'll keep thinking of learning. Yeah, you guys get what I'm saying. So, nice little 2022 model here. Every day we keep learning. And then we could look for our, we could go get very precise, look for a line time from change in state. But, here. So, 10:03. Here, let's actually make a note. Let's actually make a note of what silver bullet is, because I'm pretty sure that's correct. And if it's not, then that's fine, but that's kind of my definition. I should probably do some research into it, though, but I'm pretty sure. So, 10:03, 2022 model on the 1 minute. So, I'm just going to make a note here, like, here. Silver bullet. I'm going to put in brackets, I'm pretty sure. Um, 2022 model where the first where the for value gap of the 2022 model is the first one. Well, does it have to be the first one, or can it be like the second one? Once again, I'm not super sure. I think I don't know if it needs to be the first one or not. Does it? Does it need to be the first one? Anyway, I'm just gonna screenshot this. Oh, I know what we can do. Let's do this. Let's ask ICT-GPT. Let's ask ICT-GPT. This is a good use of ICT-GPT. This is actually good use. For the silver bullet is it the first presented, or is it the first? Is silver bullet the first 2022 model where the fair value gap of it is the first FVG that forms after 10 a.m.? The silver bullet trading model is not specific about the FVG can form before 10 a.m.? Bro, just saw the site. It's awesome. This site? Yeah, this site is nice. Bro, I don't know. I still don't know what Six Sister is, actually. I don't know what that is. Bro, it goes to show you, I'm still a noob when it comes to certain things, honestly. I am. Okay, I need to figure out, I don't know, man. Hey, JCap, I trust the man. Let's watch this.
We're in such a saturated market now where there's a million brands doing the same thing, but how can you stand out?
And yes, guys, you might be like, this is important. Why don't we keep back? No, this is very important. Like, guys, you have to understand that, I mean, everything adds up on compounds on itself. Like, I remember I was watching a video with Ronnie, like, 10, 11, 12 months about rejection blocks. He's like, bro, you're overcomplicating it. You don't need rejection blocks. You don't need this. I'm like, okay. Still, it's valuable to learn about. And it's like, it's just valuable to know about. And now, 11, 12 months later, I think rejection blocks might be the most powerful PD array. And now it's like, well, if I never watched that video about rejection blocks, then I would have never known. You know what I'm saying? So it is important to just learn.
Mastering one trading strategy is the biggest cheat code when you're aiming for consistent profits in the markets. The ICT Silver Bullet model is one that's easy to understand, doesn't have a whole lot of moving parts, and is mechanical, so you can essentially set and forget it. In this video, I'm going to share with you a simple step-by-step process that anyone can understand so you can take your trading to the next level. But before I get into that, why should you listen to me? My name's Kyle, and I've been trading the market since 2011. In the past few years, I made over $1 million using prop firms with some of the best metrics in the industry. And here's some of the proof. But that's enough about me. Let's get right into the video. Okay, so let's review the Silver Bullet model. Now, there's not a whole lot that goes into this trading strategy, and there is a level of context that will add to your performance, but that comes with experience. So I'm just going to quickly go over the couple moving parts that we have to look for when we're trying to trade this model. So first of all, this is going to be used for indices or equities, the futures markets. So our pre-market prep is really going to come around 9 a.m. to 9:30. We don't really need to sit down the prior day, and really just showing up at the charts every day is enough for you to be able to get enough prep in. Now, if you have a job or you have other responsibilities, you might have to do some of the prep ahead of time. But typically, coming to the charts half an hour early is fine because we are going to focus on trading the 10 to 11 a.m. Eastern time window or the 2 to 3 p.m. Eastern time window. So we have one or two windows, so essentially the a.m. session or p.m. session. And when we're thinking about trading within that specific.
So I need to make notes. I'm gonna take notes in TradingView. Hey, so we're gonna make some notes in TradingView. So. So, Silver Bullet, trading windows. We got, first one is 10 o'clock a.m. to 11 o'clock a.m. Eastern, obviously, and then 2 to 3. Probably p.m., right? Or is it a.m.? Yeah. Okay.
Window, basically we're trying to find a fair value gap that appears as soon as that 10 a.m. candle or that 2 p.m. candle opens. Okay, so when we get a 5-minute fair value gap.
So it's like 10 a.m. power of 3. So essentially your goal is to find a fair value gap that forms after the 10 a.m. candle or 2 p.m. candle forms. And then for London, I think it's, 3 to 4 a.m. But I don't know if that makes sense, because does the new fair value gap form? I mean, does the new 4-hour candle form at 3 a.m.? I don't know. It might be 2 a.m. because I think the new candle forms at 2. I actually don't know. I don't even know when the new candle forms for London.
That opens or is printed, it's the first presented fair value gap after 10 a.m. We're essentially trying to trade that move and possibly, if possible, trying to get a fair value gap that appears as soon as that 10 a.m. candle or that 2 p.m. candle opens. Okay, so when we get a 5-minute fair value gap that opens or is printed, it's the first presented fair value gap after 10 a.m. We're essentially trying to trade that move and possibly, if possible.
So, yeah, basically it's a 2022 model. Basically, it is a 2022 model where the fair value gap of it. So I'm just gonna put in brackets Jake's interpretation, because this isn't something he said. of it forms after 10 a.m. or the new 4-hour candle forms and you are looking to trade the expansion of that 4-hour candle. That actually makes a lot of sense.
Possible try and get a fair value gap that appears as soon as that 10 a.m. candle or that 2 p.m. candle opens. Okay, so when we get a 5-minute fair value gap that opens or is printed, the first presented fair value gap after 10 a.m., we're essentially trying to trade that move and possibly, if possible, try and get.
So in Kyle's example, he's talking about a 5-minute fair value gap. I'm pretty sure
get out of that trade if the 10 a.m. candle expands to a target. So what we're going to do when we get to our charts, we're going to mark out the Asian range, high and low. So up here, we can see that our Asian range, this is all Eastern military time. So I will usually use 8 p.m. up until midnight. So this is all Eastern Standard Time. And then the London range, I'll use 2 to 5 a.m. Now, everybody, what I've seen online, everybody uses different times. I've been using these times for many, many years now, and I haven't had any issue with them. Even if you extend them an hour or reduce,
Wait,
I will usually use charts and possibly, if possible, try and get out of that trade if the 10 a.m. candle expands to a target. So what we're going to do when we get to our charts, we're going to mark out the Asian range, high and low. So up here, we can see that our Asian range, this is all Eastern military time. So I will usually use 8 p.m. up until midnight. So this is all Eastern Standard Time. And then the London range, I'll use 2 to 5 a.m. Now, everybody, what I've seen online, everybody uses different time. I've been using
Javier, we were talking about you earlier. We're trying to understand pin bars better.
times for
But right now we're watching this video about Silver Bullet.
many, many years now, and I haven't had any issue with them. Even if you extend them an hour or reduce an hour, you're not going to get that much of a difference as far as a range. What we're really looking for is the liquidity to be rated out. So has the Asian range, or has the Asian London or 9 a.m. candle, sorry, I mentioned the 9 a.m. candle, so the 9 a.m. candle is really the prior candle to the 10 a.m. open. So we're really looking for a raid on one of these ranges, highs or lows, okay? So has the Asian London or 9 a.m. candle high or low been swept since midnight? If no, we don't have a trade. So we need to see a run on liquidity. And if we don't have a raid, we don't have a trade. So the liquidity rate is basically when we have a fake out move where we have buyers or sellers, them is swept going into 10 or 11 a.m., 10 a.m. or 2 p.m. Eastern. So we're gonna wait for the first 5-minute fair value gap to form. If the fair value gap is bearish, one of these range highs need to be taken out. So it's either the Asian range high, the London range high, or the 9 a.m. candle high. Okay, so at 10 a.m. we can possibly even see. Let's just pretend
break a structure. We know.
this is the
Liquidity sweep break. So basically, what he's saying is liquidity sweep break a structure. We know this, right? We know session liquidity sweep a session liquidity is going to be better. We know the market needs to break structure. So we get this.
candle that appears prior to 10 a.m. When this 10 a.m. candle opens, all we're looking for is a run above that candle if we're trying to go short, or below that candle if we're trying to go long. Okay, so
yeah, we know.
Enter a limit order at the fair value gap. Our stop loss is going to go behind candle 1 of the fair value gap. And we're just going to target 2R or close by end of day. Now, end of day could mean a bunch of different things for you. I would typically try and exit by 4 p.m. Eastern. All right, so let's get into some of the trade examples, and I'll go over, step by step what we're looking at. So here we have Asian range, right? You can see that this is from 8 up until midnight Eastern. This is our Asian range. We can see that the Asian range high has been taken out, and then the London range high has been taken out. And also know that we're only trying to execute inside of this 10 a.m. time window. So you can see here, this is 10 a.m. When we get to our charts, we're looking for a fair value gap. Now, this could be either a bullish one or a bearish one. If it was bullish, we would have seen the London range low be taken out, okay? And then we would be going the opposite way. But what we see here is a bearish fair value gap being printed here. And it's a 3-candle pattern, so we have candle 1, candle 2, and then candle 3. This is the high of candle 3. Okay, so what we're going to do is set our limit order, a limit sell order here, with our stop loss above candle 1's high. Okay, so as soon as we trade into that fair value gap, we will trigger into the market. You can see here that we've almost gotten stopped out, but yes, this is a mechanical system. We don't want to use any discretion when it comes to managing this trade. The only discretion we're going to have is when do we close if our trade hasn't hit the target by, say, 4 p.m. That's really the only discretion you should have when you're trying to trade this model. That's why it makes it very simple and very easy to follow, and that way you don't have to have a whole lot of thought process behind it, and you don't have to worry so much about the trades. So as soon as we enter the short position here, we're just waiting. All right, either our stop loss is going to get hit or take profit is going to hit, or we have to make a decision on closing out if neither are hit by, say, 4 p.m. So here we can see that this one has went straight to our target. All right, so this is an example where all these conditions are met. We had Asian range or London range high being taken out. If neither of those had been taken out, let's say if London printed inside here, then when we come to the charts at 10 a.m., we need one of those ranges to be taken out before we even look for a trade, right? So if we fail, let's say if the London session printed like this, just as an example. If the London session...
guys, as far as I'm concerned, my definition of Silver Bullet is going to be a 2022 model that forms within the range. So I'm going to put my notes here. So this is my takeaway of the definition of 2022. Or of the Jake's takeaway of the definition of Silver Bullet. right? This is my takeaway, right? This is everyone listen up, because this is my takeaway, right? A 2022 model could be 1 minute, could be 5 minute, could be 5 minute, where the fair value gap forms after 10 a.m., right? The fair value gap forms after 10 a.m. to get in on the expansion of the 10 a.m. candle, right? That is essentially my takeaway of the silver bullet. It's a 2022 model where the FVG forms after 10 a.m. with the idea we are trading the 4-hour PO3. I don't even know if it's 4 hour. We're trading the 4-hour candles. Yeah, wait, actually 10 a.m. Yeah, that's my takeaway, guys. I think that's what it is. And I think I'll just make a video on it and just do it with confidence, because I'm pretty sure that is correct, right? A 2022 model could be 1 minute, could be 5 minute, where the FEG forms after 10 a.m. to get in on the expansion of the 10 a.m. candle. That's my takeaway. I'm just going to say it with confidence, and we are going to move on. Honestly, guys, I think I'm kind of running out of time, because I probably got to make the market recap soon. Maybe I'll go on a walk and come back. But I should really make the market recap. So this is my takeaway of Silver Bullet. Okay, I think I'm going to go on a walk here. But yeah, so this would not be Silver Bullet, really, because the fair value gap doesn't form after 10 a.m. But I think this one would be. I think this one would be this gap here. I think this one would be. Okay, I'm gonna get rid of this for now. I mean, yeah, we could have taken line time from change state out of that, but yeah, it's not that serious. I'm gonna go on a walk and come back, and then I'll wrap this up, and then I'll do a market recap. All right. Yeah. So I'm pretty sure you could just say. I guess you could say maybe this is Silver Bullet. Then again, this is the first rally up that formed after 10 a.m. So maybe not. Okay, let's look at that first strike trade. Right. So first strike was utilizing this gap, which is the first presented for value gap, right? And we just reject it, we just reject it. Not much to say other than, yeah, we come up. It's probably an OT of this displacement leg. Yeah, somewhat. Not perfect, but we come up against the first one for value gap, and then we get rejected back lower. So dropping down to a 15-second chart, right? This is not a hard trade, guys. This is not a hard trade at all. Like, I really do think most of us would have caught this. Essentially, I would either enter on this close or this retest. Either way, it's basically the same. So first minute for value gap, we got a liquidity sweep. Right, I think most of us would take this. Correct me if I'm wrong, but what do you guys think? You guys would take this? I'd take this, alright? Where we get a sweep. So this is my first strike model. Right, sweep of this high into that first minute for value gap. And then we have there's multiple ways you can mark out change in state. You could use this, you could use this. I think I'll just mark it out like this. Then again, you could also mark it out like that if you wanted, but I'd probably mark it out like this. I mean, I guess you could align it with the inversion for value gap. I think the more obvious way to do it, though, is to align it with this. And then, let's see. Yeah, we go 3 projections. So, yeah, I would just say, maybe like this. So you could either take this on this close or the retest, either one. So, for instance, right? You can take this on the close, maybe down 2R. Kind of depends on your conviction and the drawn liquidity. So here's where you enter on the close. Probably go break even here. Oh yeah, I need a post trade of the day. That's right. I think this is trade of the day, actually. I think this was the easiest one to catch. So I'll probably post this as trade of the day. What do you guys think? Do you guys think this is trade of the day? Everyone vote. What was the trade of the day based off of, or I guess what you saw today? What do you think trade of the day was? Everyone let me know. I think this is contending. So is that Phoenix model we showed. By the way, trading floor. Okay, I'll look at that. Thank you. I really do appreciate that. I want to get better with pin bars. Okay, first strike at 10:01. First strike, 1 minute, 15 second. And then as well, you could take this version of the first strike where instead enter on the retest of this, right? I think both of these are fine, honestly. Alright, screenshotting this again. Bang. The obvious one for me was the short at market open. What was the timestamp? And then what was the what was the timestamp and what was the trade type? And then I'll go look at it. $10:01. Because I am trying to post trade of the day every single day now on Twitter. Number 2. Yeah, let's go look at that pin bar Javier sent. Because I want to get better with pin bars. I do. Okay. But I think that was news from FA said not to use them. Maybe explain better why not to use them. In any case, yeah, this will be your pin bar. So $7:40 a.m. pre-market. Okay, let's go take a look at that. 7:40 a.m. pre-market. Yeah, I was thinking that as well. The Phoenix, right? Yeah. I think that might be trade of the day. Had we been up at that time? Yeah, we came up, hit that Phoenix. That was probably trade of the day, guys. I really do think that was really nice. I think either that or first strike, that short 2R. We also had the 2022 model where we got a break of this high for value gap at OTE. Rode that up. Once again, remember what I always say is once we sweep out that low with SMT, how can you determine the bias? Becomes very easy because you can just go, okay, what fair value gaps are holding? Are we holding bullish ones or bearish ones on the 1 minute? And then are we breaking structure to the upside or the downside? Right? These are really easy ways to figure out bias. On the 1 minute chart, very easy. Yeah, we're going to mark this out real quick. On the 1 minute chart, ask yourself, are bullish or bearish 1 minute for value gaps being held? Are we breaking old highs or old lows? This will help determine bias. Meaning, look, right? So on this 1 minute chart, once we get that S&T, look at all these highs we break, right? We break this one. Now, in the moment, maybe it's not really obvious because obviously it's not always easy, but we break this high. Once again, displacement. Now, you could definitely argue that's displacement, but yeah, we're just going to mark out all the obvious ones, right? Displacement. Let's actually mark this out. Displacement. And then we just continue up, right? Displacement. And then gap. Now, I guess maybe this is not the best example, but it's whatever. I don't really care. I'm just here to be a market observer and then just keep observing. So, right. Yeah, because you can make the case that we did break this low, but I don't know. Sometimes you just kind of, I don't know. I'm just a market observer is what I'm trying to say. So I'm just trying my best. Alright, I'm just gonna screenshot this. Super rough idea, but I kind of see what I'm getting at. One minute chart, how to get bias. Okay. I do think that I agree. I would say this is probably trade of the day. We probably have enough to make a market recap. I mean, we definitely have enough. So, it doesn't need to be perfect. I just want to make it. So, I'm going to go ahead and end the stream here. Oh, that's posted on Twitter. So, x.com. Crazy. I'm getting more used to it being called X. I don't know if you guys are, but I don't know. Sometimes I am, sometimes I'm not. Alright, let's go ahead and post this image here. So, yeah, I'm just going to do this every single day from now on. So, I'm going to post both of these. So, trade of the day. Of the day. Tuesday. This was November. Oops. 25th, 2025. Phoenix. 5-minute Phoenix. What time was this at? Uh, 8:25 or 8:15. All right. Okay, I'm gonna end the stream, take a little break, and then I'm gonna film the market recap. I don't know when it's gonna be out, but I need a little bit of a break. So thank you guys so much for watching. Appreciate you guys, and we'll keep going. I better be on the charts tomorrow. That's all I have to say.